Yeah, it's amazing. I get beat up for timing because they want it to happen in some precise time frame, and I'll make the mistake of saying it could happen by this time or whatever, and it always takes longer. But what they don't stop and look at is that for 90% of the pundits out there, they didn't get the direction right. Never mind, I got the magnitude and I got the direction. Sure, it's taken longer, but that's the nature of bull markets. They stretch out.
Yeah, I have expression amateurs look for absolute precision, and professionals understand that there's risk, that things change. Your outlook could change because of certain factors that you're looking for. Maybe they all come together, maybe only a few, and you have to be flexible with these things. But in terms of your bullish calls, are you still bullish? Let actually, before we do that, I'm going to say what you said at the time and where the markets were, just to give people an idea of how good the calls were. So the S&P was at 5,000 when you called it. You said you were looking for 7,000. Obviously, it's now at 6,000, which was an amazing call. Obviously, because people were very, very bearish at the time and probably still are now. The Dow was at 38,424. It's now at 44,421, and you were calling for 55,000. The Russell, everybody hated the Russell. Oh my God, I couldn't find anyone who liked the Russell. You were bullish on it, calling for 3,300. It's at 2,258, so it's gone up, which is more than anyone else expected. And the Nasdaq was at 18,000. You called for 23,000, and it hit 22,000. It's now at 21,297 because of the volatility. Gold, you said, was going to take off, and actually, gold had come off a bit and looked sort of like it was in a consolidation. You were like, no, 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 this is going for 3,000, and it's now 2,833 and accelerating. Um, Silver was at 22. It's now at 31, and your target was 60. All those are fabulous. So that's really shooting the lights out.
Yeah, I will. The only one I have to correct you is the Nasdaq. People get mixed up because I use the Nasdaq Composite,
Oh,
so
okay.
not the NDX.
Oh, okay.
So it's not quite that high, but it is 19 and change. And my target was 23. I've raised that to 25,000. I've raised my S&P target to 7,500. My Dow and Russell targets are still at 55,000 and 3,300 respectively. But I'm still extremely bullish. I think there's a final leg into a top coming this year. Um, Short term, I'm actually probably more bearish than the market is today. I think doesn't have to, but I think there's a decent chance we see a 3 to 6% correction, or depending on the index, in the next week or so. The Nasdaq, I wouldn't be surprised to see that get down to somewhere around 18,400. The S&P could get down to 2,800, 2,840. So, when you do the numbers, it's, 3% on the S&P, maybe 6 on the NASDAQ. So we're not done. We've really kind of topped out in the market in early to mid December. And I think we're just more of the same high level consolidation here. You get people who want to see this stuff go in a straight line. It's going to frustrate them, but it's just a normal consolidation. We had a great run, as you just pointed out, and it's not unusual to have a couple months where you're back in filling, and yet, I mean, I couldn't be more bullish. I think there's still a big upside.
So the Trump 2.0 administration and the tariffs don't really change your fundamental orientation towards markets. Would that be fair?
Yes, in fact, I think what Trump's doing is absolutely right. It's pro-growth policy. You saw yesterday. I mean, people are not going to understand that. I keep saying, I use the phrase a lot. Let it play out, about the markets, about the tariffs, etc., because people want to do instant analysis on things that may be very short term, as we saw with the tariffs. He uses a lot of things for leverage to get what he wants, and yet the street wants to go around and look at what he's proposing as permanent, and you just can't do that with him. And frankly, you shouldn't do it with anything. You gotta let things kind of play out and not try to do very fast analysis on everything.
But do you think there's any risk that we get plunged into a sort of tit for tat tariff world that echoes the 1930s?
It's certainly a risk. I think what people underestimate with Trump is he understands when he has the leverage. For example, with Mexico and Canada, he just knew that they can't afford to do tit for tat. They want to talk a tough game, but in reality, they know that in the end, their markets are less important to us as a percentage of our whole than we are to them. And that's what he basically using leverage. Now, there will be places like in China and Europe where he's going to try to level the playing field some. We've been the market to the world. And, we have a new sheriff in town saying we're not going to just hand our markets over to everybody. It's time to bring production back on shore, and it's time to, even out some of these markets. So, there are going to be some times when it's a little sticky and unfriendly to the markets. But by and large, I agree with what he's doing.
Do you think it's at all likely that the Department of Government Efficiency will be able to make a meaningful dent in the debt or the deficit?
I do. I mean, what's amazing about Trump?
It's a huge problem. At the scale of it, it's like the Augean stables. So it's a non-trivial exercise.
It's a non-trivial exercise, but that's why when you see them go in, even though USAID is a relatively small part of the budget, when you see them go in and lock the doors, lock people out, and say we're doing an audit, we're going through the numbers here because too much money's been kind of just passed out to favored constituencies around the world. That's a sign. Trump has had 4 years to think about this, and it's not just Trump. He's got good people around him. They mean to change business as usual. And I do think, it's not going to be $2 trillion coming out of the budget, et cetera. But I do think you're going to see big efficiencies. You're going to see things done more like a business. And I think the markets will respond to that.
I mean, that would tend to suggest then that the strength in the dollar is sustained. Do you have a view on the dollar?
Yeah, well, the thing is, there's on the one hand, which is Trump and Trump's agenda, and then there's on the other hand, the macro, as I say, the macro trumps Trump. We are in a cycle. We're in a super cycle where we're coming to the last decade of a super cycle. We're in a situation where I think there is an awful lot of, my global bust forecast following the melt up still exists. I still believe before the end of this year, we're going to be in a global bust. But it has nothing, it has little to do with Trump's policies. It's really something that's been building up for decades. And, I think the pandemic made it more difficult for the central banks to understand the risks. The pandemic basically stretched out the cycle. So they're still worried about inflation when I think deflation is the coming risk. So there's those things out there that I think is going to turn things the other way. But you've got, in the short run, you've got good news coming from Trump, I think. But in the end, yeah, I think there's some real risks out there.
When are you saying this super cycle actually started?
I define a super cycle as the long cycle between two depressions. So the 1930s was the last Great Depression, and the 2030s is probably the next depression. So we're in the last decade. The global bust will feel like a depression, but that's not the depression because we have the printing press. We'll print our way out of this one. The problem is it will create the opposite effect. We'll be dealing with a deflationary bust in the next year, I believe, and they will print like they've never printed before, and it's that money that will cause the last recovery cycle, but it'll be a recovery cycle that's driven by double-digit inflation and industrial. So by the time we get to the early 2030s, I think you could be looking at 25% inflation in this country.
Wow.
So, and if you have 25% inflation, and right now we have turned 320 trillion in global debt. By the time we get to the end of the decade, we could be looking at something north of 400 or 450 trillion. You have that combined with inflation in high double digits, and interest rates will match inflation or will track inflation. You can't solve that.